welcome all of you on behalf of Oman Chapter of ICAI to this important CP event on e-invoicing, and it's a game-changing reform. E-invoicing is more than a reform. It represents a major change in the innovation, adoption of the efficiency of the economic transformation. And we have a esteemed panel of speakers. To begin with the program, I request everyone to kindly rise for the ICAI motto song. Thank you. Be seated. Now I invite our respected chairman, Mr. CA Umesh Bume, to welcome officially, also share his wisdom. Thank you.
तालियां नहीं तो गालियां. So there is a ritual. If I raise hand, everybody has to clap. So that we started when I took over on 20th May. So thanking His Majesty Sultan Haitham bin Tariq, CBFS, our sponsors. We don't have representatives today because of some other schedule. Respected Rajendra sir, Central Council members, our speakers for the day, Jay bhai, Ram bhai, Girish bhai, and our past chairperson. We are happy to have Bhavani sir with us today. So let's give him a big round of applause. So Rajendra sir, just to give an idea, ICAI Oman Chapter, we are having around 400 plus members. There are around 700 plus members in the country. Our country being scattered, all are not in the network, but we are connected to almost 450, 500 members. And this year we have this motto, Jnanam Paramam Balam. And we are working on CAAI, Charting Accountability Through Artificial Intelligence. And we have adopted a logo which talks about Dhyana Mudra plus learnings comes out as a Kalpa Vriksha. So we are trying our best small efforts to pass on the knowledge to our members, arrange for important events. And as a result of that, last month, we had a fantastic event on IFRS workshop. It was a success beyond expectation. It was success beyond imagination. Those who agree, please clap. Those who attended really cherished the memories. And those who could not, we are planning to work on something soon. We request all the members to share their areas of interest so we can curate a specific session which will address the larger audience rather than coming up in pure technical topics. With this, we have one announcement to make. We did it last time. So any guesses? Yeah. So it's going to be on 1st November. We are going to launch our this year's international seminar called Vista. It's going to be an event which will be conducted in Sheraton, followed by, we'll have one more event after that called Oman India Investor Forum, which will be a joint event between OCCI and Indian Embassy Muscat, and it is facilitated by ICAI Oman Chapter along with FICCI. So this event will be officially launched on Thursday in Bharat Mandapam meeting we are going to have at FICCI event, and looking forward for all your support. Since you all are our members, I have one important ask to everybody in terms of Filus, the money part of it. So we will contact our members who are in industries. So please come forward and connect us to the potential sponsors. We already have 2 sponsors sitting in front who have sponsored today's event. So we want your support to take this event ahead and make a remarkable impact by conducting these events. Now comes the announcement what you were looking for. So sir, as I was explaining, AI in ICAI has got a lot of traction in India, and we are having the first batch of AI in ICAI course on 11th, 12th and 13th of September. Happy to announce that the batch got full in the first 12th, 13th, 14th of September, correct. Thank you for correcting. So the registrations got full in 4 hours, and we got such a huge response that we are arranging for a second batch on 9th, 10th and 11th of October. I'm sure the links are out, so please register and pay as well, because the registration criteria is those who register, pay. Links are not out? Just check your, restart your mobile. Okay. So, and one more thing, happy to announce that we are the second overseas branch of ICAI to host the AI in ICAI. And we will be the first batch, overseas chapter of ICAI, to host the second batch of AI in ICAI outside of India. So we came second in the first criteria, but we came first in the second criteria. 9th, 10th and 11th October. 9th is a Thursday. Level 2 is not yet approved to be held outside of India as of now. So once we complete level 1, we will definitely arrange for level 2. How many would want to join for level 2 here? Let's finish with the level 1 first then. Rajendra sir, we as a part of our efforts to give it back to the society, we started this initiative 2 years ago called Omani CFO program, wherein we train the aspiring Omani finance professionals who have experience of 8 to 10 years and are on the verge of becoming CFOs or the finance managers. So we have got a team of almost 100 plus mentors, we call them, who are the trainers from our chapter. If you look at them, they have got more than 20-25 years of experience individually. So if you club 100 mentors, it comes out to almost 2,500 years of experience, which is channelized to groom the upcoming talent in Oman. And we have got a very good response. We had the batches starting from Salalah, then we had in Muscat, Sur, Barka, I missed one, Sohar. And we are going to have a second batch in Barka, and this time we have got 100 plus registrations. Yeah, 100 plus participants we have got. We got almost 335 registrations, which we filtered down based on the criteria, and now we will be training 100 plus participants. The batch is starting from 20th September. Okay, one more important announcement. It was just shared with all the members. I'm sure you would have got emails from ICAI directly that save the date for WOFA. It is going to be on 31st Jan and 1st February next year. We will also be arranging for some group bookings. If members come forward, that will help us to go together and represent ICAI Oman chapter there. So we have got upcoming events. I'm just letting everybody know what's in the pipeline. So you can keep your diaries blocked, or those who want to be part of presenting the events for the benefit of the members can come forward and connect with any of the managing committee members. So AI batch is getting repeated, Vista and OIF, which we announced. Then if the DMTT regulations are out, we are going to have a session on DMTT as well. Regulatory framework is one, and 3rd December, our past president Amarjit Chopra sir will be addressing on regulating the accounting and auditing profession. Yeah, so coming to the topic of today, e-invoicing, so I call it taxes. So there is one story which reflects the essence of taxation and the fairness. So let's imagine there are 10 friends who are going out for I'll use the word chai, though it's not that expensive, but they're going to go for some fancy chai or ice cream. Nowadays they have this gold-plated ice cream or something. So the friends are, some are rich, some are poor. So they decide that the rich friends will pay a higher contribution and the poor will pay a lower contribution based on their earning capacity. So as a result, the poor ends up paying negligible or nothing. If their prices reduce, then the savings also get distributed in a disproportionate manner. Those who are earning less will be paid more. Those who are paying more will be given a less discount. So as a result, what happens is the big players exit the market. So the learning from this is very aptly mentioned here, that taxation requires fairness and cooperation, a system sustained only by mutual responsibility. And our today's topic, e-invoicing, is such a system which will make both the parties, the taxpayer as well as the authority, to work together, removing all the disparities. And that's what I thought of having one quote here, which is by Benjamin Franklin. He said in 1989, the essence is the red line. Only two certainties we can count on is the death and taxes, and this still holds good for us. And again, we are going to have one more tax being introduced, for which we had a session on 5th of August on the personal income tax. So those are the only certainties. Since you're talking about quotes here, I would want to share some funny quotes with you. So indirect taxes are like salt in food. Too little, it's bland. Too much, it overwhelms. This is very interesting, which I liked. We generally don't notice when we pay the indirect taxes until we total up our receipts. And it links with the next saying, that the direct taxes come to you once a year and then ask you to pay the check of whatever taxes you have. But the indirect taxes takes it every day without you knowing, okay, you already paid so much of the tax. And nothing is certain except death and taxes. There's also ancient reference to the indirect taxes, wherein Kautilya said, tax should be like a bee who take out the nectar from the flower in small quantities to maintain the balance. Too much of taxes will also hamper the entire system. So that's the ancient references. And the next one is the quiz we discussed about. So how many of you want to play a quick quiz? Winners will get a Mercedes-Benz. Who else? Who wants to play the quiz? Raise your hand. Okay. Shall we start? Okay. So the first question is, where and when did the first electronic data interchange event occur to mark the beginning of e-invoicing? Speakers are not allowed to answer. They are debarred. Any guesses? The first, so it's a worldwide event. France, no? Yes, sir.
I think it was in 1989 in USA.
No, you missed by some quarter of century. Okay, so I don't have to give you Mercedes, okay? So it was in 1965, the first EDI, electronic data interchange, was there between Holland and America. That was the first kind of e-invoicing foundation, we can say. It was not exactly e-invoicing, but that is considered as the first base for the e-invoicing. Ready for the next question? Yes or no? Yes. Okay. How many e-invoicing technologies exist worldwide? 72, okay. Any other answer? Exact number? Yeah, so Chat GPT gave me weird answers, so I came up with this answer. Many. Okay. Okay, next one is on how many countries have implemented or planned e-invoicing? Many. Ah, I knew. See, I'm a mind reader, I can understand. How many are there? Any guesses? 99. 50. See, there are no answers for close answers. It has to be exact answer. Many is not the answer. So around 24 plus. So it started with early pioneers in Latin America, then came to Europe and now to Asia. India started in 2020, and I think last year, 24, was the complete implementation because they had a lot of updates which happened. And Sir is our GST expert here. He will probably shed more light on that. And the last question, how many nations plan to phase rollouts of GST in next 2 or 3 years? Many. Huh? 20 plus? Somewhere close? Not 10. Again many, but I will give you the answer. So 25, these many countries, 26, we can see Oman's name over there. 27, few more countries are there. So this calls for so that's a very good saying I noticed in Das Bodh, which is by Samartha Ramdas. So it also talks about the importance of having an efficient and aligned system to ensure it functions properly and achieves the objective. Okay, so I'll not take much of your time. We have got good speakers lined up. So I always believe we work together. So जहाँ तक रास्ता दिखता है वहाँ तक चलिए, आगे का रास्ता वहीं से मिलेगा. So let's march towards it. And with this, yes sir. So with this, I will close my address. But before that, sir, we have one more ritual which we started from January onwards, when Sunil Talati sir were here. So we say those magical lines. What are those magical lines? East or West, Indian Chartered Accountants are? Yes. East or West, Indian Chartered Accountants are? Yes. And one more time, louder. East or West, Indian Chartered Accountants are? Yes. Thank you very much. Over to you.
Thank you, Meshji, for your thoughtful and inspiring words. I now invite our keynote speaker, Mr. CA Rajendra Kumar, and I request CA Gaudav, immediate past president, to escort and present the.
Meet CA Rajendra Kumar P, a distinguished chartered accountant with over 3 decades of experience. He is a fellow member of the ICAI and has been elected multiple times to its Central Council, currently serving for the term 2025 to 2029. CA Rajendra Kumar is the presiding officer of the Board of Discipline at ICAI and chairs the GST and Indirect Taxes Committee. He also holds key roles in numerous ICAI committees, including legal, accounting standards, and ethical standards. Internationally, he is the chair of the Edinburgh Group, a coalition of 16 global accounting bodies representing over 1 million accountants. He is the first Indian to hold this prestigious position. Additionally, he serves on the Technical Advisory Group on Consumption Taxes at the OECD. He is also a member of International VAT Association. Please join us in welcoming CA Rajendra Kumar P.
Very esteemed chairman of this wonderful chapter, Unmesh ji, other office bearers whom I met, Sangeeta, Abhishek, Jay, who came to receive me in the airport yesterday, Ajil, who coordinated with me in India, the MCA partners who are here, my schoolmate Lakshman, and other esteemed speakers who are going to speak, and my friend from India whom I met yesterday in the airport. We are very good friends, but we never knew that we are going to the same destination. Ranga is a chartered accountant. He's a very brilliant chartered accountant and has a good firm in India where they are truly auditors of best business houses in Chennai, in Tamil Nadu in particular. I come from Chennai, basically, born and brought up in Chennai. And I come from the place where we call proudly as intellectual capital of India. Delhi is the political capital of India. Yeah. She lives next door to my office in Chennai. We just got introduced. In fact, we call Delhi as the political capital of India, Mumbai as the finance capital of India, Kolkata as the cultural capital of India, Chennai as the intellectual capital of India. Because if you look at the entire administrative landscape of India, you will find Venkatesh, Srinivasan, Sriram, Tirumalai, all these Tamil names across the administrative mechanism of the entire country. Of course, there is one Srinivasan sitting behind also. He has come down to Muscat from Bahrain very recently. So some of them I know. I have interacted with them in the past. But this is my first visit to this chapter. In fact, I'm extremely happy that someone invited me and I took time to come here. Basically, in the recent past, because of the numerous positions that I hold in ICAI, I've been avoiding numerous events. And this event in particular gave me the much required rest. In fact, Jay told me that this is your first visit to Muscat. I'm organizing a tour for you. 11 o'clock the vehicle will come. This morning, 5:30, I messaged him and said, I'm not going anywhere. I want to stay in the hotel and take rest. So thank you for allowing me to take rest. That is also required. Otherwise, people will take you here, there, and we know. Because it's rare that people get caught of a person like me who is a little bit extra busy in the ICAI's mechanism. In fact, today is International Literacy Day. The UNESCO celebrates today as International Literacy Day. And on this day, all of you are seated here on this very wonderful topic of e-invoicing. Today is also September 8. So you add my date of birth and year, it comes to 8. My room number is 1615, which is 13. My date of birth is May 13. So, I am not a numerologist and all, but then someone told me in India that these numbers, you add up your date of birth, year, that number, the date you are born, on that date, 1 plus 3, 4. This 4, 8, 13 will follow you wherever you go in life. So you also try and see in which hotel you say. 99% it has fallen exactly true in the last 20 years. Right, sir?
So, if you get that much, there's one more line that says that 70% of the world is affected by this patterns.
Yes. 8 is Saturn, basically. Yeah. So, of course, we are not here to talk on astrology. But then, today is a working day. And Chairman was very happy. He said that, sir, we have got 160 registrations. But I must tell him that, sir, wherever there is GST or VAT, registrations will flow. You don't need to do anything. In India today, we have lesser number of people attending meetings on direct taxes and more coming to GST. Because it is something which you said, I think, it quietly takes consumption taxes and you never know when it hit you. In fact, I relate this to two of the film industry people out there in India. I don't know how many of you watch films. Even today I watch 4 films in a week. In a week I watch 4 films. There are 2 masters of film industry whose titles were very popular, who were masters in storytelling and masters in giving title to their film. One was Dada Kondke. How many of you know Dada Kondke? Andheri raat mein, diya tere haath mein. At one age, we have to go and see that movie. Kya title hai yaar, dekhna padega. So I will be speaking in little bit Hindi, Tamil, English. That is one. Then there is one film producer, director, writer in Tamil. How many of you know Tamil here? Okay, quite a few. K. Bhagyaraj. Master storyteller. Chinna Veedu. Chinna Veedu means small house. Chota Ghar, dusri wali. वही है. இது நம்ம ஆளு ஒரு கைதியின் டைரி. His titles will lure people. So title will be something which will lure people inside. Now what is the movie, then you will have to only see and decide if a movie is worth or title is worth. But then the film will run. So today, in anywhere you go, sir, Chairman sir, the word VAT, GST sells. You don't need to take extra effort. Yeah, for a person like me who has been in indirect taxes for almost now 28 years, this particular topic of e-invoicing, all these things are not new. We have traveled through physical controls to now virtual controls. In fact, the GST in India, I must tell you, friends, is an amazing international phenomenon. I, coming from Chennai, must take pride that it all started from my place. The Taxation Reforms Committee, which suggested a kind of VAT like what GST is today, was by Dr. Raja J. Chellaya. If I stand next to him, he comes only up to my shoulder. I am myself one small fellow. He is much more. So, if you look at that entire first Taxation Reforms Committee's report, you search in the Google, you get, he promulgated that theory. And then that was taken forward by the Kelkar Committee. It was Raja Chellaya's recommendation that the empowered group of finance ministers was formed to introduce VAT in the country instead of sales tax in India. That is how the transformation started in India. And then rest is history. Today we are in GST era now. Started in July 1, 2017. And when I look at whatever has happened in the recent past of 8 years, again 8 years means I immediately remember one song from one Rajinikanth film, Basha it was. I don't know how many of you have seen that movie. If you have not seen, you must go today night and see that movie. You will feel very much happy about it. If you don't know the language also, just see Rajinikanth movie. There's one song in which the writer splits the life of a person in 8 years. What you do in first 8 years, what you do in second 8 years, what to do in third 8 years. So first 8 years of GST is over. What is the first 8 years? Playful days, happy days, least bothered days. No one knows who will fall, who will get up, who will get hurt, nothing. So that is what happened in India, 8 years. Next 8 years is years of learning. So we have started that period in India, years of learning. That's how 3 days before you had the GST reforms 2. And basically the rate restructuring took place. The meeting started 3 years before, it culminated now and the government has announced it. Now this e-invoicing, when I talk of e-invoicing, this is not the end. This is not the end. When I say this, it is something which is going to transform. I have some PPT here, but I am not used to speaking from PPT. I always give an extempore lecture. But I was told, no sir, PPT is required. I told my office. But then there are esteemed speakers who are seated here, Jay and others. So I am not going to take any technical for you. Wherever there is e-invoicing today, it is not that smooth, my friends. And especially in those countries where you have that strong votaries of data protection policy, countries like Europe, the EU basically, if you see, there are still struggles. You could have seen some EU countries' names here, Spain, France, Italy, where e-invoicing is still under the stages of discussion. They have still not yet come to that phase. India went ahead and introduced it. The only country in the world to have done it smoothly. For such a kind of geography that we have, the kind of diversity that we have, the kind of population that we have, the kind of literary levels that we have, the kind of internet ups and downs that we have, the amazing revolution is the GST revolution in this country, which took 10 years for it to stabilize and then announced on 1st of July 2017. I am proud to be a part of that revolution. I can tell my grandchildren that, look, it is we who did it those years. Of course, there were a lot of struggles. Before I start this, I would like to recite one sher. Our Nandaji, our president, is known for reciting sher, shairi and all. So one, I picked it up from him also. For GST, especially e-invoicing, I would only tell this. अपने हौसलों को खबर करते रहो. अपने हौसलों को खबर करते रहो. जिंदगी मंजिल नहीं, सफर है, चलते रहो. This is e-invoicing. This is e-invoicing basically. It is not the end, just its beginning. In India again, we are only up to B2B. Only speakers will tell whether B2C is there here or not. We have still not gone to the B2C level. It will take some time. These are what are the basics of why invoicing is required, etc. Because your speakers will tell you much more better than what I am standing here to tell you. But then, let me tell you, friends, e-invoicing is one mechanism of tracking your goods, the movement especially. And in a huge country like India, when goods move from Kanyakumari to Kashmir and Kashmir to various other places, this tracking of goods is extremely important. But then tax gap happens, that's different. But this is one mechanism whereby government can effectively control and be assured that yes, revenue leakage doesn't happen. This was the initial rollout out there. First we started with 500 crores and then slowly we upgraded ourselves. And today we are at a particular level where we can say that yes, we are proud that we have introduced this to one level of industries. There are of course exemptions. like SEZ units, banking, the services. Services basically, e-invoicing is not effectively introduced in many services sector because you don't need them. They're all already controlled service sector. Statutorily regulated services sector are there. And there are certain fellows who you can never control them, you can never regulate them, whatever it may be, the transportation sector. Absolutely not possible, so chhod do. The phased implementation we had, and we used this JSON schema in India with so many software systems integrated. The GSTN is doing an amazing job, friends. The government company which was formed, the Goods and Services Tax Network in India, it's a not-for-profit organization, completely controlled by the government. Government is the full shareholder of that organization. And it is they who have devised this whole mechanism. The entire GST in India's, the entire software, the entire connectivity is provided by that one single company called GSTN. Integration with tax system, training and support, and security and authentication. Friends, here, this training and support, I would like to spend a few minutes here. What we do in India, from the GST Indirect Taxes Committee, we train the entire government officials in India on every aspect of GST. You surprised? Almost every state in India, we are the training partners. Government, including the central government, the official training arm, which is called as NACIN, N-A-C-I-N. We officially train them. Whenever there are GST training programs organized by them, it is the ICAI which is partnering. We started it off by offering. Now, we know how to sell. And that's it. That was the end of it. And today, almost all the states in India, right now when I'm speaking here today, some training program would have concluded back in India, in some state. Especially the northeastern states in India, totally into GST training with us. We have MOUs with 20 states in India. There are 18 zonal training units of the central government. We have MOUs with about 10 government training arms. So what I suggest to your chairman, it is not that the government don't require training. They require training. It is not that the government knows everything. They also want to know something. But then, that the kind of, it's a very touchy relationship. Chartered accountants appear before authorities. They are also the trainers. What we do, wherever the training program is held, for example, if the training program is held in Gujarat, there are no speakers from Gujarat. We bring speakers from outside Gujarat. Then the officials are comfortable. We establish this. But your Oman is a very small place. You can't do that. But still, you should try having some MOU with your taxation department. You can talk to them. You can offer training programs to them. We can give you the draft MOUs, or the MOUs which have entered with the states in India, the central training institutes in India. We can share it with you. Maybe you can try it out, see how it works for you. In fact, as far as the GCC is concerned, the levy of indirect taxes, if I'm not wrong, I met a team of people in the OECD in the year 2015 or 2016. They had come to the OECD meeting of the Working Party 9, and then they were with us also in the Technical Advisory Group. So I asked them, why are you guys here? They said, we are planning to do something on indirect taxes out there in many of our countries, and hence we are here. That's when I realized that something big is going to happen in this part of the country, and of course, now it has taken shape. All chartered accountants, professionals in India today are inside the entire GST canvas, I must tell you. Before 2017, there were minimum chartered accountants who were working in the area of indirect taxes. Today, if you don't know indirect taxes, you are maybe out of practice, or you must know someone who knows the subject. That's become very important. I'm not going to speak more, but I'm available here full time, and whenever, if there is any time, extra time left at the end, I would also like to come and speak to you on the Members and Student Services Directorate, the largest directorate of ICAI, which handles almost 60% of the ICAI's work in the form of registration of students, registration of members, SSP portal, KYM and everything. I'm currently heading that. We are doing a lot of changes and reforms in that. Any of you have any questions? No, sir, my address is not getting updated. I'm not able to do this. I'm not able to do that. So many issues may be there. And I see, basically, yeah, I understand. I know where all the questions are going to come from. And I'm ready with almost all the answers. You can query me anything, and I'm also the legal director of ICAI. So I can tell you the legal viewpoint also, and I'm also the presiding officer of the Board of Discipline of ICAI. So I don't want anyone to sit before me, any of you to sit before me for that matter per se. So I'm available fully here, and I sincerely thank the chapter for inviting me, and I'm also eager, as all of you are, to listen to the speakers and carry home some of these points so that let's see whether we can use in India or we can share something here. Our committee is always available. We have a booklet, sir, on e-invoicing. We have a small book. It's in the soft form also in the website of ICAI. You can download. We have 30 publications. All the 30 publications of the GST Indirect Taxes Committee you can download from our website. Or just send an email and we'll send you the soft copy, whichever you want it. gst@icai.in. That is a short email ID of our gst@icai.in. Of course, this is my email ID. Mark a CC to me. Our committee is there with you at full time. All our publications are for you. And GST in India, VAT here in India, we are all following the OECD model. Let me tell you. The entire GST in India, VAT here in UAE, and EU VAT, everything is OECD model. Here and there are some changes, here and there. Otherwise, the principles are the same. Sincere thanks to all of you. I've taken little extra time than I got it. Thank you so much.
Years back, when I was doing CA in Chennai, our institute in Nongambakam, I used to visit regularly, and still after 20 years, when I see CA Rajendra Kumar's face, I can see the memories. And he's very active that day, and we can see that now also. And people like Mr. Rajendra Kumar, the value adding, the effort and the hard work. Because of that, we are all privileged to be part of our institute. And the speeches you delivered that time really inspired us, and we were always motivated with that one. You are a real model for us. Thank you so much for your words and inspiration. Now we'll move to the technical session, and I request CA Jay, and I requesting CA Jay to escort Jay and give the.
Our speaker today is CA Jay Duseja, Managing Partner at JSR Tax Advisors. Jay is a chartered accountant with an All India rank and holds a Bachelor of Commerce degree along with a GCC VAT diploma. With over 13 years of experience across Oman, the UAE, Qatar, Saudi Arabia, Bahrain, and India, he has built strong expertise in VAT, excise, and tax advisory. Before establishing JSR Tax Advisors, Jay was the tax director at Deloitte Middle East and earlier served as Group Tax Manager at the AW Rustamani Group in Dubai. He has successfully led major tax transformation and VAT implementation projects across industries, from oil and gas to real estate and financial services. Please join us in welcoming CA Jay Duseja.
Good evening to all the members. It's really great to see hall full, and in 30 minutes I'll try to cover the functional part, then my co-speakers will cover the technical part, and then at the end we'll be happy to take up a number of Q&As as the time permits. So without further ado, I will start. Today we are going to cover 4 topics, and which is mostly related to functional part. So first, I'll cover what is e-invoicing and what are the different models across the various countries. So e-invoicing means a structured invoice which a machine can read, and it's in a standard form, not like different companies issuing different format. It has to follow a certain standard which is also known as schema in IT language. Sometimes it's regulated by the tax authority, validated, and it's directly shared between supplier and buyers in some of the models. So this is basically an e-invoicing. So now you would be thinking, if this is e-invoicing, what about the invoices which we are issuing today? Are those not e-invoicing? So the answer is no. Those are digital invoices. PDF, Word, Excel, which we generate through our system, those are human readable, but machine cannot read it. That is the difference between a digital invoice and e-invoice. Digital invoice, it's not required to be validated by anyone. Supplier directly can share with the customer as per the mode agreed by them via email or by hand or by through their own portal. Whereas in e-invoicing, it is validated by a third party and it is shared through a standard network. There are different models which we'll see in the coming slide. And the formats of digital invoice, as we discussed, is PDF, Excel, Word, or even image format. But e-invoicing means an XML format or a JSON format, which we use in India, or PDF A3 with embedded XML data attached to it. So those are machine readable. So largely there are 4 models across the world. The oldest one was post-audit model, in which supplier will first share with the customer e-invoice. It will be validated later by the tax authority or may not be even validated. That's why it's named as post-audit model. Then later on it got upgraded to clearance model, like the one which we have in Saudi Arabia and in India. What does clearance models means? First, it will get cleared by a tax authority or an authority. Then supplier can share with the customer. This is the second model. Third model is hybrid of first and second, post-audit and clearance, in which real time the invoice is shared with customer as well as with the relevant authority for validation, both together. So it's the hybrid one. Then the fourth one is the latest, which is called exchange network or interoperability model, which is we are going to discuss in detail. So what's the advanced version in this? In this, even a tax authority becomes part of the network. They also get the data shared along with the supplier and the customer. So UAE and Oman, they both are going to follow this, the fourth model, which is also called PEPAL model. So now let us discuss the model which is being introduced in UAE and Oman. The reason we kept this session for UAE and Oman both, because model is same, timelines are same. So if you have any presence in both the countries, you can do the implementation together. Even if you don't have presence in UAE, at least you can take learnings and use those learnings for implementing e-invoicing in Oman. So basically this model is called Fire Corner model or Decentralized Continuous Transaction Control and Exchange model. Each word signifies a feature. So what does Fire Corner means? Fire Corner means 5 stakeholders. The first corner means supplier, which will be the entity originating the data. So corner 1, supplier will push the data in the required format to corner 2. Corner 2 is an ASP, approved service provider, which they will appoint based on the list issued by the OTA. So there will be list of around 20-25 approved service providers. Supplier can select whichever is convenient for them, suits their budget, and they can share the data with corner 2. Corner 2, after receiving data, will validate as per the standards issued by the tax authority. If the invoice is validated, they will share further with other 3 corners. If not, it will send back to the supplier. If invoice is validated, it will simultaneously share with corner 3, which is ASP of your customer. So similar to supplier, even customer has to appoint an ASP. So that ASP will receive the data, it will again validate, and it will send to the corner 4, which is customer. And also, once validated, corner 2 will send the data to corner 5, which is tax authority or Ministry of Finance, the central portal which they will create. So that's how it's called 5-corner model, and the data will flow real time, in near real time. Once the invoice is shared with tax authority, they will also send the acknowledgement to corner 2 that data is received, and even the customer, corner 4, in the reverse order, they will send acknowledgement to their corner 3. Corner 3 will simultaneously do in the reverse order to 2, and 2 to 1. So though the model looks bit complex, but in reality it happens in milliseconds, in fractions of seconds, I would say. So this is the diagram form. We can quickly go through the steps which I mentioned. Supplier will push the data to corner 2. Corner 2 will validate. After validation, it will send to corner 3, which is customer's ASP. Customer's ASP will send to customer, corner 4, and also they will send to tax authority in a TDD format. And once received by corner 4 and corner 5, they will also reverse order send the acknowledgement, which is also called MLS in the IT form. So this is in step-by-step format. All fine till here? Or am I going fast? You want me to go slow? All fine, or should I go a bit slow? Fine? Yes, it can be same. So like supplier can assign company A, even customer can appoint company A, same. So but it will be functioning still as corner 2 and corner 3 in the independent capacity. Companies can be same. So in Oman, they are going to launch in 4 phases. The first phase they have targeted on 1st July 26 for top 100 taxpayers. Now in this phase, they are even including B2C, which is different than India, what we discussed, different than UAE, which we will discuss. So they are targeting on company level, not on transaction level. So top 100, including B2B, B2C, B2G, all transactions will be covered. Then there's a gap of 6 months in each phase. Second phase, which will be on 1st January, it will be for top 1500 companies. Third phase is 1st July 27 for everyone who is VAT registered, except ministries and government. And the fourth phase is for ministries and government. Though it is mandatory for top 100, from phase 1 itself, other companies can do on the voluntary basis for a trial purpose. So for them, there is no restriction. And recently, tax authority started sending survey emails. How many of you received survey emails from OTA? I can see many hands. So they have named the e-invoicing project in Oman as Faturti. Faturti in Arabic means my bill, or you can say my invoice. So that's how they have named the project. And in the survey email which you received, they asked number of questions. How many B2B transactions you have, how many B2C, which ERP are you using, are you ready to implement e-invoicing, any challenges which you might face, or any suggestion which you have to give. So all those factors were to decide the top 100. So if you have mentioned over there that yes, we are ready for invoicing, you would be selected in the top 100. And if you have not filled up the survey, you will receive another link to submit the survey. So it's mandatory. So last date for first survey was 14 August, second survey will be coming soon. So they are going to decide not only on turnover basis, they will be considering multiple factors. One of the factor is they want to select top players from each industry. So they have the testing and the learnings from each industry. They'll select one from banking, one from insurance, one from FMCG, real estate. So it's not only based on the revenue. At least 6-7 factors are there on which you will be selected. So by October or November, it's expected that intimation will be sent to the top 100 companies. Now let us see what is timeline in UAE. In UAE, at present, they are doing first phase only for B2B and B2G. They are not including B2C transactions because it's voluminous and even difficult to launch in the pilot phase. So they've just announced first phase as of now, which is Q2 26. Rest of the phases they will announce soon. They are working on it and they will roll out in a phased manner. Second thing what they have done is they have already released the legislative changes and the official data dictionaries we are covering in the next slide. And within a month or two, they will also issue the list of certified accredited service providers, which can be selected as corner 2 and corner 3. Also, UAE has published few FAQs. These will be mostly applicable to Oman. I am expecting 90% the model will remain same, data dictionary will remain same, barring few changes like decimal from 2 to 3 decimals and other few minor changes. Most of the things will be same. So there are many FAQs, around 68. I have taken top 5 to share here. So first one is that in case of VAT group, every group member has to connect with the access point, corner 2. It's not only the lead member. And not only every member, every system. So let's say you are having one system for your FMCG business, another software for your another division. So both the ERPs must be connected with the corner 2. This is one of the clarification. Second, in case of export, in case your customer is also in the country where PayPal network is already there and you have their PayPal ID, you can put it over there and invoice can be shared through electronically to even your foreign buyer. But in case they are not in PayPal country, nothing to worry. This transaction can be done by putting a dummy ID and no need to send to buyer through 5-corner platform. You can send it by email or the normal method. Third is e-invoicing will not be applicable on import of goods and import of services. So import of goods will remain as of now with customs through custom declaration. And for RCM, we will account same as it is we are doing now. Then another important clarification is that even in the e-invoice model, buyer can reject the invoice, which is corner 4. He can reject based on commercial reasons. Let's say amount is incorrect, not matching as per the PO, or some wrong detail. So still in the e-invoicing, if the invoice is rejected or any corner is rejecting because of some data error, the only route to correct is through credit notes. Cancellation is not allowed. If you have by mistake issued invoice for $5,000 instead of 5,000 Riyal, cancel it, issue the new invoice. Any error in the remarks, description or the customer name, only route is through credit note and each and every transaction will be recorded in the network. Yeah, we'll cover and what we'll do, because many points might be covered till the end of session even by my co-speaker. So we'll take all the Q&As at the end together. So you can note down and we will take it at the end. Now, after understanding the model, timelines, let us see which are the key elements which are part of any e-invoicing implementation. So, in e-invoicing, there will be only 4 major documents which will be valid as per law. 2 we know, tax invoice and tax credit note. Other 2 are self-billing, tax invoice and tax credit note. Please note this is self-billing, not the reverse charge mechanism. Self-billing is adopted by many industries, especially in telecommunication or insurance sector, wherein instead of supplier, the buyer issues invoice to themselves. So if that method is adopted, the buyer can issue the invoice under self-billing, as a self-billing tax invoice or self-billing credit note. The data structure, requirements, methods all remain same. Only the corners get shuffled. Instead of corner 1 in the standard method, corner 4 will issue the invoice. And they will intimate the supplier that I have issued the invoice. Same like the traditional self-billing method which we are doing. So any document other than these 4 will not be valid as per the law. that will be considered only for your internal documentation purposes, not for tax purposes. Key elements, the heart of the e-invoicing implementation is data dictionary. Data dictionary in simple terms means a file or column headings which must be present in your system either through in the vendor masters or in the transactions file or through other module. And there's always a fixed format of those fields. If it is not standard in all the companies, data will not be able to, we will not be able to share the data in the network. So all have to be on same page, that's called data dictionary. Second is the ERP should be capable to exchange the data with the external companies like ASPs or to the tax authority. That is another key element to evaluate for your software. Third is sanitizing master data. Now we might have different pseudo names or short names, but in e-invoicing, all the names must be standard as per the registry. Like VAT TIN has to be complete. Now we are seeing many companies, they are keeping VAT TIN of 13 digit instead of 12, which is there. Some extra character. Or name, they will mention LLC, some will mention L.L.C. So now it has to be standard. And even in masters, the country codes, currency codes, which we'll see in the coming slide, has to be standard as per the data dictionary and the documents issued. And the fourth one is selection of ASP. As there will be many options in the market, it is necessary to evaluate multiple ASPs to select which suits more to your ERP framework and to your industry. If ASP is not good, you won't be able to even generate the invoice after the corner 2. So let us see what is the content of data dictionary. So this is officially released by UAE tax authorities, which shows that tax invoice will have at least 50 fields. At present in Oman, as per Oman VAT law, we have only 13. And out of those 13 also, still after 4 years, we are seeing that many companies miss a couple of fields. How many of you are mentioning payment due date in the invoices? Advance payment date, HS code for the goods. So now those will be mandatory. If those are not there, you will not be able to push your invoice to corner 2. So these fields will be there. Now some fields, as I mentioned, can be brought through your masters, customer master or supplier master. Some will come through transaction, and some can be tweaked upon with your ASP. They can generate through some logics if it's not there in your system. Also, they will launch the codes for services, which is not there as of now. So every service will have a code. So it's uniform and data can be collected that which service is making how many taxable supplies. So these fields will be there. They will introduce the legislative changes also in Oman and official data dictionary. Similar to tax invoice, in case an invoice is issued for non-standard rated supply, let's say for out-of-scope supply or zero rated supply, even for that e-invoicing mandatory. Here only one field is less. Can you guess which field? VAT is not there. So over there it was 50, here it's 49. Those fields must be there. Then this is also one, I have taken only samples from the data dictionary. It's a 168 page file which UAE authorities have released. Around 160 data fields are there, and each data field has its own structure which has to be standard across all. To give you example, date. Now date has to be YYY-MM-DD format, compulsory. If there's any other format, either you change it in your master system, in your ERP, or with the help of your ASP, you can change it from your current format to the required format. So for each and every small field, there would be rules. They are also called schemas, which has to be followed compulsory. So invoice type code, categories would be there for each of your goods, for your services, which has to be mentioned. Then there will be tax codes. Now every company has their standard, or I would say own tax code. SAP has standard tax codes, Oracle has standard tax codes. Other companies like in Dynamics, they can use their own codes. But after the release of data dictionary, these would be the standard codes. Again, same rule, either you amend in your system or take the help of your ASP to convert your text code into this text code. So let's say I am using text code of OSR for standard rated supply. Using some logic, OSR can be converted to S, which is required here for standard rated supply. So these are the text codes which are to be followed. Also, as I mentioned, for everything, there will be rules, formats, and typical structures. May it be country name, may it be currency code, may it be exchange rate. Like exchange rate also, they will limit only up to 6 decimals. Now in Oman, if you will see the central bank website, there are buy and sell rates. But as per VAT law, we have to take average of buy and sell. So manually it has to be calculated, and some currencies have decimals up to 8 or 9 places. So in this system, they will restrict only up to 6. Then even the license numbers will be required, CR numbers. How many of you are having in your vendor master or customer master CR number, TIN number, tax card, resident card number? So that will also be required. Yeah, resident card number. So to identify some of the sole establishment or individuals, even that is mandatory. So it's a gigantic exercise. It might not feel so now, but it's a big reform which takes almost 10 to 12 months bare minimum. You know better than me, adding one field in ERP, how much time IT team takes. So it's a big reform. So after covering essential elements, let us see which are the essential steps or a general step. Company to company it will vary based on the industry they are, how many systems they are. But I'll just share few which should be applicable to most of the companies, or which can be at least taken as an idea. So 3 phases. One is assess, where we are now, and what is required to reach the compliance level. Assess. After knowing the gap, implement, fill up that gap, do the trials, testing, and once you think our trial runs are good enough, working, implement or operate at the go live date. So your sales are not stuck because of the invoicing. So these 3 broader categories I have further broken into further activities. I already shared the PPT in the group, so you can save your phone memory and you can just focus on the script. So PowerPoint is already there in the group. So I just broke down into key stages. What should you ideally do in the gap assessment? Firstly, form a committee select key members from IT, finance, operations, even legal, because this project is not only for tax department or only for the finance or IT. It's an entire change across the company level. All the departments have to work together. So form a committee, assess, list down which scenarios you are following. Now, I only covered tax invoice and tax credit note. There can be various use cases under that also, like invoice under the profit margin scheme, invoice issued by the agent, or invoice issued on behalf of third party, reverse charge mechanism. Luckily in Oman we don't have local reverse charge mechanism, which is there in the UAE. So as I mentioned, e-invoicing is not covering import of services, but it does cover local RCM. So Oman at present we don't have. In UAE we have a local RCM on certain transactions. So for them, local RCM also has to be covered as a use case. Form a full strategy, how much time you will take, how much budget you have to allocate for doing all those changes. Arrange meetings with the vendors, ASPs. Even though list is not issued now, still there are market leaders which we know will be for sure approved by UAE and Oman. So you can start discussions with them, have demos, have meetings, see their credentials, pricing, all those things you can do it now without waiting for the official data dictionary. You can use your time to save on the further cost or on the last minute rush. And this has to be done from both the angles, functional as well as technical. Now, even in functional, we have to validate the transaction mapping. It might be possible that we are doing certain transactions with 0%, which should be 5%. Now in e-invoicing, if we'll put the code 0, system will validate. But we have to validate the tax determination rules before pushing the data, that am I charging the correct rate on the supplies or not. So that can also be done in the gap analysis in the phase 1. So once you are ready with the strategy, correct partners on the board, team on the board, execute the roadmap, which also again takes 4 to 5 months in a medium-sized company, I'm saying. Then do the testing in the production phase, and once it's done, testing is correct, we have only 10 months left in invoicing in Oman, similar in UAE. You are ready to go live with the correct and the accurate data. And many companies I have seen when VAT was implemented, they were not able to bill for 2 to 3 weeks at least. Their revenues were down and their business was stuck. At least let's have learning from past and start now to prevent those kind of scenarios again. Key steps required. First step, partner with a tax expert who can guide you through the entire journey. Like similar when somebody goes to climb Mount Everest, they hire a Sherpa who guides them throughout the journey, who knows where are the pitfalls, where are the challenges. So he will hold your hand from beginning. He will guide you which ASP to select, how to form your steering committee, which are the use cases, what happens in Japan. Now let's say this model is already there in Japan, in Malaysia, in Singapore. So he can share you the learnings from those countries. As we discussed, Oman and UAE are not the first countries to implement e-invoicing. We can take the learning and take the solution accordingly. After appointing a tax partner, as I mentioned, formulate a detailed implementation strategy, including your software, even process changes, because we are making changes in the invoice. So it will affect your AP process. Now many companies, they have SAP Ariba portal to accept the vendor invoices, Oracle iSupplier, or various other portal to collect the invoices. Now all those processes has to be changed considering the e-invoicing. Now it will automatically come through PayPal model. Many companies, they have their PO processing, they have to change now as per this model. Inventory module, even the collection and all those business processes are to be changed. So it takes time. And more than change, even it takes time for team to get aware, adopt the new process and implement. So even the training and the change management requires a lot of time. Third is evaluate the various ASPs in the market, see their capabilities, success stories in other countries relevant to your industry, and then at least shortlist accordingly, if not final now. And then last, implement on time to ensure that your business is continued. There are many benefits of starting the project now. I am just sharing 5. First one, cost saving. You can get the best quality of partners, committed partners now. At the end, they will be booked. So they will charge premium. So starting now is beneficial for you in terms of cost saving. No brainer. Second, you will get quality time. I'm not selling myself, but it's a fact. It's a fact. So second is, you will get quality time to brainstorm. You don't have to just rush and do what is necessary. You can evaluate, can I use this e-invoicing data in my other MIS process to make my life easier or better for the company? N number of use cases are there, which you can use it. Anyways, you are spending cost. So why not to solve many other problems along with the e-invoicing in the same cost? Employee training and change management, because it cannot be trained in a night. As I mentioned, any error has to be corrected through tax invoice. So if the employees are not trained well, if they will make more mistakes, your process will get delayed, payments will get delayed, and even it will be flagged to tax authority. Why this company is every day raising 100 invoices, cancelling 100 invoices? It raises a flag for lack of control and lack of training, which can open more assessments, and delay in the refunds. As I mentioned, if you will have quality time, you will have time to think how other countries handle this situation. Okay, if I don't have this field in my ERP, which are the different easier methods to have that field in the system. And lastly, you will be confident that whatever I did was compliant as per law, and I am ready to face the e-invoicing once it go live. So other than this 5 also, n number of benefits are there, which can be taken if you start now. So that was all from my side, and then many other things will be covered by our co-speakers from MCA. Thank you.
Jay was not selling, he was asking all of us to sell, because he is making aware the challenges associated, also the opportunity. And if we are not selling and making aware our company, at the end all burden will come to, because we are the expert and we can understand. Thank you, Jay, for simplifying and explaining. Now we'll move to the next speaker, CA Girish Chand, who will guide us through the practical aspect of e-invoicing. I request CA Ashish Subedar to escort.
Our speaker today is CA Girish Chand, Senior Partner at MCA Gulf. He leads the compliance practice covering corporate tax, VAT, economic substance regulations, anti-money laundering, and ultimate beneficial ownership across the UAE, Bahrain, Oman, and Saudi Arabia. With more than 25 years of experience in finance and audit, CA Girish has held senior leadership roles including Chief Financial Officer of Enoch Retail in the downstream oil and gas sector. He is also a TADAT trained tax professional certified by the IMF Fiscal Affairs Department. CA Girish regularly conducts seminars for companies, professional bodies, and industry groups and contributes to UAE newspapers and radio talk shows on tax matters. He also serves as Secretary General of the Dubai Accounting, Auditing and Taxation Business Group. Please join us in welcoming CA Girish Chand.
Now I invite Mr. CA Ram Subramaniam to share his experience. I request CA Abhishek to escort.
Today, our speaker is CA Ram Subramaniam, Partner for AI Digital and Transformation at MCA. CA Ram is a seasoned finance and technology leader with more than 25 years of global experience. He has held senior leadership roles with leading multinational companies and Big Four consulting firms, where he drove large-scale transformation projects, ERP implementations, and digital innovation. His expertise spans retail, banking, and technology, with a strong focus on building sustainable practices and creating business value through digital transformation. Over the past 15 years in the Middle East, he has led prestigious projects for major corporations and government entities across Dubai, Abu Dhabi, and Saudi Arabia. With a proven track record in finance, human resources, procurement, and customer experience leadership, he brings a truly holistic perspective. Please join us in welcoming CA Ram Subramaniam.
So, good evening, everybody. I think, okay, first let me take this opportunity, to kind of thank the Muscat Chapter for basically inviting us, the able team led by Unmesh, right? So I've addressed all the chapters of the ICAI in the GCC. The only place I didn't address was Muscat, and today is my privileged day to address all of you all. Right? Now when we talk of the topic of e-invoicing, I think you all studied for your CA exams, right? So what was one feature that we all did during the CA exams is that effectively we kind of memorized again and again. So I think one caveat we are going to share possibly is that you might see the slides in a sense repetitive, but I think once you walk out of this room, I think you can start giving lectures on e-invoicing as such. At least that is what we'll help you with. Okay. Primarily, I think when we talk about e-invoicing, how many people in the room will be impacted by the first phase of, say, 1st July 2026? And please, I'm not talking of the consultants, because consultants are always impacted. Right? So any of the people who are in the industry, yeah. So we always take pride that, yes, in fact, when you look at the region, right, from 2000, I would say from a UAE perspective, from 2018 onwards, the landscape has changed, and we as finance professionals are much more valued, right, in terms of the complexity that, the various taxation regimes have brought about. Okay, I think we have heard about what indirect tax has done. Possibly in this region there was always a direct tax, but basically indirect tax has come about recently. When we talk about, the VAT context, okay, and I have been associated with the VAT implementations in the GCC from 2017, right? And I think maybe in the Oman context from 21, right? So you had a journey when you had the first VAT implementation, okay? And I think quite a few of you remember the journey. So there were two elements in that when we were doing the first VAT implementation, right? There was an element of the functional thing, where suddenly you had to kind of traverse the journey of the treatments of VAT, what will apply. It took us some years to settle that. Hopefully we are settled, but not exactly. We still see in the practice people still making some mistakes. The second element of that particular implementation was from an IT perspective, okay? And actually that was quite a bit of change, because effectively from whatever we were generating invoices in our good old systems, we had to basically get into a regime of possibly, doing it in a certain format, right? Now, that particular thing, as Jay pointed out also, is that, a lot of people were not ready. Okay, we spent, and it's varying degrees. Some of them, they took 1 month, 2 months. Some of them even took 6 months to get it right. Okay, but you had the luxury because the reporting time was possibly, you had a luxury of the reporting being quarterly, monthly, so you had some time, right? Now, this one is slightly different, and I think I take the, the example which Rajendra ji pointed out is that, the 8 years. And I was thinking, yeah, it is 8 years, right? Effectively, if you take almost 8 years where, we had the playful mood in terms of the VAT implementation. Now we are getting into a very, kind of the next journey where, you have to be a little exact. Exact as in, you don't have the luxury of possibly, raising it at a later date. Now it is when you press the button, effectively the invoice has to be right. That is the phase that we are getting into when we are talking of the e-invoicing per se, right? And that is the element that, when we talk, and I think as consultants we'll repeat, start early, right? And it is not from the perspective that, by you starting early, you are possibly not going to benefit. Obviously, the benefits are greater, right? As we have seen with anything, when you come closer to the date, the cost goes up, complexity increases, and you might not be ready. And here there is a hard deadline. And depending upon if you're in the first, second, third, fourth phase, it's something that you have to be ready with, right? So basic is that, this is simple. At the same time, it is complex. It is simple from the perspective that, yes, we can imagine all that, but we don't know what is our ERP, what is there in our ERP today, that can we generate straight away those invoices from day one, or you have to really do, and that is where this whole processes of what we talk about, needs to be put in, right? So after the initial kind of, setting the stage, we'll go through the presentation. Like I said, some slides may be repetitive. Please pardon us for, being repetitive about it, but we will try and put some new perspective beyond what Jay has said, although he has covered it well, but we'll try and bring some perspectives of how you can basically get ready. So it's a similar thing where we say what is the background, what is the technology, right? What are the challenges, the approach that you will take, critical success factors. And actually this presentation we are doing a double act, yeah? So I am supposed to talk about the functional, which Jay has spoken to a certain element, but maybe I'll use my gray hair and maybe throw a little more light into what it is coming through. And we have Ram, who is actually our technology expert. So he will basically talk about it from a technology and a transformation perspective, which is there as such. Right, this all I think we have been through, as in e-invoicing, what is happening in the world, the transaction volumes. We had Jay talk about it, Rajendra ji talk about it. So I'll not basically, talk much about it. Right? Here is element of, maybe just to add to what Jay said, is that there are certain countries which have got the clearance model, like India is the clearance model. Okay, for us, closer home is the KSA model, right? And we basically saw the KSA model from, basically it's almost now 2 years. KSA went into, a multi-phase kind of implementation. Okay, they did a two-phase thing where effectively they were testing out first in terms of, simply between the buyer and the seller, right, those transactions. And in the second phase, now mandatorily, you need to get the clearance, okay, from the tax authority before you actually send to your customer. So that is a phase that KSA has been through. Right now we are, I think, if I remember it correctly, we are now in the millions in terms of transactions. So we are almost the last phase as far as KSA is concerned in terms of the e-invoicing. Now when we look at all this, the element here is all these three countries have something in common, which is the PEPAL model, right? And I think Jay has been through the PEPAL model in much detail, right? But when you look at, what is different when you talk about the e-invoicing, which is coming in both in UAE and Oman, is effectively the requirement of the PEPAL standard, right? And I can tell you from the UAE experience, one of the things what UAE did was that they wanted, the criteria, like in fact, a lot of ASPs are applying now. But what they wanted is that you needed the ASPs to have at least 2 years in the PEPAL network, okay? Now what did that do? That effectively meant that the service providers who are there in UAE, most of them, the technology players, they can't, be an ASP by themselves because they are entities which are in the UAE, right? And they don't have any experience of the PEPAL network. Yes, they will go in for tie-ups and they will do all that. But suddenly you find that IT players in UAE cannot in the first element implement this. Okay, so what it meant was there were international players who were in the PEPAL network. They are the first ones to kind of apply on the UAE portal. I'm not privy to what Oman is going to do as far as this is concerned, but if it is similar, where effectively you are required to be on the PEPAL network for a certain period in time, that again can change the landscape as far as Oman is concerned. So that's a bit about when we talk about the PEPAL network, what is the difference that is coming out. Okay, now this element thankfully was not in Jay's slide, so I can talk about it. So what is it for the tax authority, right? Effectively, this is a role towards, or there is a move towards digitization, right? Today, when you look at the tax authority, it is getting the information in postmortem. It is after you have done everything, and then you want to correct something, you do that, and then you are reporting. Okay? Now, in the new system, what will happen is that effectively you press the button at your end, the tax authority gets the information. Okay? Obviously, you know, I think we have all been in compliances, right? What it can be used, I will not talk about the compliance part of it, but effectively they get the information, right? You know, it enables them to do better decision making, right? It enables them as an economy, you know, to kind of basically have a better idea of what the transactions are. Obviously, there are some positives also. I think when you talk about refunds, hopefully the process will get a little more simpler. Yes, there is still the element of, you know, the invoice uploads which still have to be figured out, right? But it is expected that with these things, the streamlining of processes would happen as far as the tax authority is concerned. And this is a move towards digitization where everybody is going. The ultimate thing is about, I think, there will come a day, I don't know when that is, maybe 5 to 10 years, where effectively you might not have to file the VAT return. And it is something which will be, you know, you already done, and that is provided everybody comes on board, that's when it is possible. The time frame is not known, but that is the direction that it is going. And I think, like I think Rajendra ji also mentioned, worldwide, we are still in the, I think you also said that, right? Walk on the path and you know, you'll know further. So that is what in terms of what is it for the tax authority. I think we as taxpayers also, yes, there is a compliance element, there is a responsibility, but actually there is, if organizations look at it, this is an element of digitization. Okay, and I think Ram will talk about how we can lead to further digitization from this thing, right? Effectively, what we are saying is that, you know, you can also reap a benefit, right? Of course, the refund element is there. But today, if you look at it, frankly, okay, I want to ask a question. How many of you are still using Excel sheets to file your VAT returns? And if you're not raising your hand, then I know what the real problem is, that you don't want to tell about it. But what we have seen in our practice is that at the end, VAT returns are being filed through Excel sheets. There is no VAT automation in the strict sense of the word, right? But this is a step towards VAT automation. And in fact, you know, one of the things is when you're looking at ASP, I'll let you a trade secret. You also look at it, are they geared for VAT automation? Because it is quite possible for you to move into a VAT automation stage once you do the, you know, kind of e-invoicing. So that's another benefit that can happen. Obviously, there are other things which Ram will talk about in terms of how it leads to a digital transformation as such. No, this is where the invoicing is coming now, right? So far, nobody was.
Currently, yes, we have to use. We are forced to use.
Yeah, because that is, but you still can get that information from your system in the form of the output. Yeah. So, you know, when you look at systems today, and as accountants, we love Excel sheets. Even if the ERP is giving us, we want to, you know, get a download and then look at it whether it is correct or not. Yeah. So now, sorry, as far as questions we'll take at the end. Okay, now I'll ask Ram to take the second part of it on the technology bit.
Yes, thank you.
I'm coming back. Don't be back.
This is supposed to be a joint presentation just because we were not allowed to use the other mics. We've been asked to talk through the same mic, so that's why we are alternating. I'm a chartered accountant, but 25 years plus in technology and offshoring and outsourcing and digital transformation and whatnot. I've lost touch with tax, so pardon me for my lack of knowledge in taxation or the less knowledge on taxation. But I'll give you the IT person's perspective, okay? So someone said it's a Himalayan task that ahead of us on e-invoicing. I'm just thinking that there are much more complex IT projects, so you don't need to worry about this e-invoicing project, okay? So my technology teams are all AI-enabled. The developments that took 3 to 6 months is now done in 1 month. The automations that took 3 months to 6 months to 9 months is now done in a matter of weeks. So AI is changing the world big time, and e-invoicing is one of the areas. It's a great opportunity to digitalize. So I'll walk you through some of these slides quickly. The e-invoicing regulation, it's a mandatory requirement. It's mandated, so you don't have a choice. Come 1st July or whatever, 1st October 2026, all your invoices, when you press approve in the ERP, it goes into the government database, okay? So we need to actually sit and think about what is that we are doing. I have clients telling me that, okay, I approve the invoices and then I start negotiating with my supplier, right? So those are things that you don't want to expose to the government. So that's the reason we need to start thinking about it now. It's a mandate. You don't have a choice but to be compliant. Whether you're directly under the scope of reporting, or you will be hit in any case because of you'll be on the receiving side of the invoices, if not you are billing somebody else, okay? So let's all remember that this is a mandate and you don't have a choice but to be compliant. And number two, it's real time, okay? Number two, it's real time. So you don't have a 1 month or a 2 month time to file the returns and corrections and revise returns and all of that stuff. So this is real time. When you click the button, milliseconds, it goes out to the government. And it's holistic. There are people talking about exceptions and not covered. You don't need to submit these invoices and all of that. Let's sit back and think. It's just 1% or 2% of the entire business. Okay, 98%, 99% of the invoices will still need to flow through. Let's not worry about the 1%, 2%. Yes, you need solution for that. That 1%, 2%, you can think about it now. But let's create a system and a procedure that will sort out your 99% of your problem. Okay. And the technology exists today. We've been evaluating a couple of, or more than a couple of, almost half a dozen tools and technologies that exist outside of the region, and we're trying to bring them into the region also. We are partnering with a few of them, and we have also evaluated what are the best characteristics we need to look for in those vendor selection framework as well. What do we want to give to our clients? Evaluate current ERP systems and define a robust data mapping and validation. So you need to look at your ERP and look at where these 50 fields are residing and are they good enough to be sent to the FDA. So that's number one. That's the core of your compliance requirement. Number two, identify appropriate set of tools, technologies. So when I say tools and technologies, it's the e-invoicing platform, the ASP's platform that takes your data and puts in as an XML format and then pushes into the FDA. It's also the integration methodologies that you need to be aware of. Some systems don't talk to other systems that easily, so you need to have workarounds, and therefore it's simple, straightforward, but you need to decide that procedure now, right? If you delay that, invariably your IT team is going to say that it's not in the roadmap and you need to wait for 3 months, and therefore we get into a big discussion with the technology teams. So it's better that in the budgeting sessions and in the roadmap for next year's operations and the technology transformation projects, it's better to get that into the roadmap right now. Integration methods, that's basically what I was talking about, and it should be scalable. So it's not that it's for current process this year, next year, it's going to get more and more complex. It's going to include the B2C at some point, and therefore it's better to build a system that's capable of scaling up. Take care of all your volumes, 100% of your invoicing volumes. That's what you should look at now. And of course, you should create a roadmap of implementation. So what you'll do in the coming weeks between now and 1st July 2026. So that should be the focus. It's not difficult. It's easy. You have service providers. You have the technology today. And therefore, all you need to do is take the decision now and not procrastinate, right? So this is a 5-corner model. We have spoken about this. Just as a quick recap, corner 1 is the seller. Corner 2 is the ASP of the seller. So you will sign up with the ASP. And then once the ASP, how the data flows in, so the ASP connects with your ERP. And as and when you approve an invoice, the invoice is picked up automatically and reviewed by the ASP in their system in a matter of a couple of seconds. And then the data is pushed into the FDA system, which is corner number 5 on the other side. And parallelly, information is sent to the buyer's ASP. And think of it as a stock exchange, right? You can't buy stocks from person A to person B directly. You need to go through a stock exchange. So that's basically what the ASP is doing here. And then from corner 3, it moves into the buyer side of things, which is the corner 4. So as data flows on the gray lines from left to right, there's also the green lines pass on the other side, which is basically the message confirmation systems. So you will get a confirmation of whether the invoice went to ASP, ASP to FTA, and then ASP to the buyer side. All of that information you'll get. So what do we do with this information? So we need a real-time dashboard that says, I generated today 100 invoices, 50 went through, 50 rejected, whatever reason, right? So you need a dashboard of that. So when you're talking to your technology partner, you need to be able to see that happening, okay? That dashboarding and reporting is very critical in this, and for the internal control purposes. If you do it right, you can use this data, we can call it big data also, right? So we can use this data in a very effective way to track and report our revenue cycle. So that's we've spoken about this 5-corner model, but that's something I wanted to highlight from a technology perspective. Right now, the legalities between corner 1 and corner 4 is not covered as part of this project, okay? So if you're rejecting some invoice due to a poor product or something like that, it's not covered. Invoice will still flow through, it will go to the FTA, and if you're rejecting that invoice, you can always send a credit note or a reversal of that invoice. So that's basically the e-invoicing 5-corner model is in a nutshell. So as we see, this is a breakdown of further of the 5-corner model. So when we're talking about the inputs going in from on the left side to the right side, so usually in a large enterprise, it's about 10 or 15 ERPs and at least 30 plus subsystems. When I say subsystem, it could be POS machines on-counter sales and whatnot. So there could be at least, in a large enterprise, we will usually connect with at least 15 to 20, 30 systems on the left side. And the connection methodologies can be, it could be FLTP, it could be APIs, and it could be at least 6 or 7 types or different ways of connecting in the technology world. So look out for a technology partner that is capable of handling all of these exceptions. And therefore, the data flows in, and then it goes to FTA, and then when you actually receive invoices, you don't have a choice. Actually, in the AR side is complex. The AP side is complex for once, okay? You will get all these 50 fields on the AP side, okay, in an invoice, and all of these 50 fields will come and hit you when someone's sending you an invoice, okay? On the AP side, you need to actually do a one-time fix of all these 50 fields to be able to accept that, okay? So I hope you are able to follow me on that. When the invoice comes from corner 3 to corner 4, you will be hit with 50, 60 fields. You may not have that today, right? So that's a one-time fix. If you do, that should be fine. But on the AR side of things, you need to be able to configure this for every invoice type, yeah? So that's on the data flow on that process. I hope I'm not going too fast. You're able to follow me? All right. So we've seen this in Jay's template as well. So the 50 fields is very well defined by the UAE in the data dictionary. Every field is defined with list values, which basically talks about not just the field and the type of the data. It also, wherever there is a type, it lists the number of variants it can have in those fields. So basically, you need a complete data template that talks about each of these fields. While we are actually looking at the data in your ERP systems, we will look at each of these characteristics of each of these fields, yeah? And the list values. So there are technology available today. The data mapping, that's a key and crux of the entire e-invoicing project or the preparation step that you will do, right? There are automated data mapping and reporting tools available as part of the e-invoicing ASP or the service provider. On the left, you see the source system data list, right? So this is how the data sits on the left side. And on the right side, you have the actual mandatory 50 fields or whatever, right? So I would be surprised if at least 10 to 15 of these fields will be straight match to the government's requirement. And rest of the 30, 40 fields will need to be modified, okay? You have three options. Either you can change your ERP, which is a long route, or you can actually put in some fixed numbers or characters or whatever through the tool, through this ASP service provider tool, or you can actually transform those date fields, okay? You can keep the date field in the ERP, and then you can change the format of that date and then push it into the ASP system, right? So which means that you are actually getting a sanitized data of your AR ledger itself through this mechanism. It's not just for compliance purpose. Look at it also from the other side, that you have a big opportunity to have a clean AR data in your systems, which is not possible if you're trying to do this within the ERP. But with this e-invoicing project, you have a great opportunity to get a completely clean and a lot more informative AR information, right? And there are technology tools available today that actually automates this entire data mapping and with complete trail, and you don't need to change anything in the ERP. It just pulls data from your system, and then based on the actual logic that we have defined for each of the source field and the target field, it changes, and then it pushes into the ASP system, and then from ASP system, it goes into the FTA. Yeah? So look for things like this, the automated data mapping with complete audit trail of how you are mapping from your source to the target systems. And these are usually fully integrated with the ASP systems, and therefore it gives us great opportunity to create a lot more dashboards using that data. So we spoke about 50 mandatory fields and one invoice type, the standard invoice types. There are, as you see in the UAE data dictionary, they've already issued 16 plus various types of, multiple types of invoices. And the mandatory fields only cover roughly about 6 or 7 of it. And at least about 10 of the invoice categories will need additional fields. So over and above the 50, you will need to get an additional input data fields to be able to be compliant with the FTA requirements. So where do you get these additional fields from? We need to go back to the not just the ERP as a core source system, but also go to the subsystems, which could be your front-end sales systems also, right? So you need to pull data in, and then it could be, so one invoice, for example, a zero-rated supply needs additional field over and above the 50, and therefore to comply with that one invoice, to be compliant, sending it to FTA, you will need to at least touch 2 or 3 systems and pull the data in and be able to push it to the FTA system. And therefore, what we have seen in other countries is that even the central ERP system or a group headquarters don't have this level of details in many companies, in many groups, that the e-invoicing central database is able to give them. And therefore, we could do a lot more analytics using this information. Yeah? And it's real time also. So a lot of times, the group consolidation doesn't happen automatically, or not at a transaction level you consolidate information. So this is a great opportunity for all the group finance people to be able to generate a lot more information and analytics out of this exercise. So use this as a huge opportunity that we have. If you do it right, you can actually benefit a lot more using this digitalization. I'm going to pause here and then get Girish to talk a few highlights. Yes, please go ahead. Yes.
Sorry, we break the monotony of somebody talking. So we also, maybe in case you're getting bored, we kind of wake you up. Okay. Primarily these challenges, I think, largely have been spoken about as such. Okay. I think the element here, one is possibly the complexity of the 5-corner PEPAL model, right? That's something that maybe we are not seen in this part of the world, and that's something that we need to kind of, adapt to as such. Yeah. I think the preparation part of it, we have opted upon saying that, like they say, if you start early, you will be better prepared in terms of when the deadlines come.
Okay. So what are the complexities? But before I go to the challenges, I want to tell you that whenever I'm working on projects, e-invoicing projects, and we are working on bids, I tell them that, okay, I talk to the technology teams, I tell them that, okay, let's put 4 weeks in, we will need to do the entire analysis of the process. They say, no, Ram, the technology is advanced. We can do it in 1 week. We can do it in 2 weeks, okay? So I'm not here to talk about the challenges in that way. Yes, there are challenges, but the technology is available, and therefore it's a lot easier to handle systemically these challenges, right? High volumes, yes, it's a challenge if you don't handle it properly. Multiple VAT registration, multiple entities, inconsistent data can be an issue, but we need to have a plan, and we can attack that in a nice way if we plan it and take it to the right level of details. Large volume of transactions is not a problem, but it can actually, if you don't plan it well, you could end up with a lot more rejections, and therefore the fixing will become a problem, and therefore the testing and the planning for this, especially in large volume transactions, is important. Custom solutions, industry-specific solutions is very important. As I said, it could be 1%, 2% of the exceptional transactions. So complex pricing, discounts, multi-currency is an issue, but it can be addressed if it is designed properly. Zero-rated exempt supplies and all of that stuff also. There are countries that's running on B2C also currently, and therefore B2C works on exempt supplies mode. So we have the technology, we have the knowledge already. So therefore, these are solutions that can be easily addressed. Of course, yes, there are complexities, and we need to be able to understand what's the whole scheme of things, what are the different types of issues and problems that you have in your current industry and your current operations. So that's very critical to have that in-depth knowledge of your current challenges, right? Multi-system data reconciliations, it could be, again, when we have 20 plus subsystems and 3 or 4 ERPs, you will actually find that your current reporting also is not very accurate. This is what I've always found out when we are offshoring big chunk of volumes and big operations for multiple countries, and then we find that the consolidation, when we are actually sitting and doing in a lot more automated operational force, we find that the history data was not correct, okay? You will find this actually, the multi-system data reconciliations, when we actually start doing the invoicing, you will come across opportunities of correcting your existing reporting and existing way numbers are reported. Quality of master data is a key issue that needs to be addressed as soon as possible, because this is a great advantage that you have to address as part of this project. There are two issues. One is incomplete master data information in your systems, okay? That's given, all of us know that. And when we actually add the master data consolidations, you'll find that the data is inaccurate. But what's even more difficult is when you have different branches, different entities and different operations, different country operations, you will find that the same field, different branches are using in a different way, okay? So that's what is more difficult. I was trying to consolidate. I was managing the KFC operations in this region for 13 countries, and we were trying to do a chart of accounts harmonization, right? The same field, every data is perfect, and this data in all the columns, but then everyone is putting different data in these same columns, right? That's what became more difficult for us to consolidate. And therefore, those are things that we can take a great opportunity in this project to correct. Credit note, debit note linkings, the mapping is also a big issue, right? Especially vendor account statements. I know a lot of my clients tell me that it's a big issue. The technology today is a lot better, using fuzzy logic and AI logics and multiple ways we can actually try to match the transactions. We also work with a couple of partners that actually specialize in this area, especially in the retail industry, identifying anomalies in transactions. Okay, when we say anomalies, it's a complex logic based on 15 fields or 15 to 20 combinations, and with a job script that runs on at least checking about 150 variants in transactions. So the technology on this has evolved big time, and therefore the credit note, debit note matching or reconciliation as a tool, reconciliation as a practice is evolved big time over the years, in the last 3-4 years. And therefore, quality of master data, you should consider looking at it now and get to the right technology. You should be able to get into a good shape on that. Integration and archival, as I said, it's an easy thing to do of all of this, and the only aspect we need to consider is you need to take the decision as soon as possible and decide how you will link, how you will integrate the systems. Validation and handling errors. Real-time validation is critical, and therefore look for real-time dashboards, because we can't accumulate transactions in this e-invoicing project because it's real-time. And 2 days backlog can create actually 2 weeks of work, and therefore it's very critical that we need to be able to test properly in these test systems. And error handling, of course, we need the technical support 24/7. Key considerations. This is something that we have come out based on our experience working with large clients in UAE, especially on e-invoicing. Central versus decentralized. Do we democratize? If you have 10 business lines in your group, do you ask each one to find their own vendor and do their own things? It's going to get into a bigger mess. What we strongly recommend is get into a central model, have one vendor. You can have individual entities running the project, but in a structured way, centrally managed. So the biggest advantage is that when you manage it centrally with one vendor, with one central database, pulling in all of these AR and AP invoices, it's actually going to get you a lot more benefit, giving you a full insight of your group's operations, right? So the technology exists today that you can have multiple entities, multiple instances, and still be able to consolidate that. So that's on the central versus decentralized. In-house versus third-party solution. I know many of our clients are waiting to see the UAE legislation, and they think they can do it themselves as the invoicing. Signing up, of course, engaging with some other ASPs. I would strongly recommend that you are actually missing the experience of some of these vendors with hundreds of thousands of client experiences they have globally. You will eventually come to that, but you will waste a couple of years in that process. I would recommend don't get into that and get the advice and sign up with a third-party, experienced third-party service provider. Phased versus big bang transition. Clearly, we need to phase it out, and we don't have a lot of time. If you actually think of it in a large group with at least 5 or 6 different business lines, some of them will be easy, some of them will be complex, and therefore phased rollout is the best option. Cost versus information security, of course, there's no question about that. Security and data information security is paramount, especially in this region. Yeah. So pitfalls and preparation steps. I'm just going to skip this. 3 main points in this one. Don't underestimate the complexity. So I want to say this with a limited view. So I don't want to scare you like a tax practitioner. Yes, the project is easy, but plan for it now. And the key aspect is time. You may not get the adequate time for implementation and testing. So don't underestimate the complexity. Lack of regulatory clarity. It's always going to be there. It happened in VAT implementation. It happened in corporate tax implementation also. The regulatory clarity comes in batches. But we have the learnings from the UAE. UAE is actually leading. If you're implementing the Oman, it's not going to get more complex than the UAE regulation, and therefore you can actually take the UAE learnings now and start implementing. Delayed execution is a big issue. So then you start compromising on quality. Yeah. Those are the key points that I want to leave you with. And then there are a few specific industry challenges Girish will talk about. Yes?
Yes, sorry, I think because of not having the column mic, others we could have both sat there and done it. I think these are, maybe we are having the breadth of the industry as such, right? So when we talk about, I think, manufacturing, obviously, where we talk about you having multiple systems, right? And then, kind of having to, basically decide where are you going to basically do the invoicing? Are you going to do in those source systems, or are you going to bring it into your ERP and from there you're going to do the invoicing? That's something that you need to look at, right? Retail FMCG has its own set of complications in terms of primarily different point of sales, right? You have got the van sales, right? They are basically issuing the invoices out there. What happens in such case? You have the returns, you have the FOCs, right? These are all elements of complications when we talk about the retail and FMCG, and all these needs to be tackled, and that's where we are talking about the gap assessment phase, where you look at all these various elements and, kind of the nuances of the business, so that you are prepared when you are going to get into the e-invoicing. Like we said, effectively you have to think of all your complexities and, provide the system for that, so that you're ready when it is happening as such. Logistics and freight, again, the same element of the multiple nature, whether you're talking of, deliveries within the country or you're talking of outside the country, right? When you talk about the imports into the country. So all these different elements of, when you talk about the logistics and freight, again, these is something that you'll have to factor in. When we talk about construction, obviously the standard element is in terms of your progress payment, treatment of retentions, right? Now, these elements of complexities which are there in that particular industry will need to be also looked at. Oil and gas, again, contractual, project-based, all these different industries specific challenges will have to be addressed, when we are doing the gap assessment, right? So that your e-invoicing phase is much more smoother.
Anyway, a couple of slides with that we will finish, and then we'll start taking your questions. So the key aspect, 5 or 6 steps that you need to do. Number 1, select an ASP. As soon as it is started publishing, approved by the government, get a good ASP. And then this project also has big impact on VAT and taxation. So therefore, also look for a good taxation. So this is a tax e-invoicing project, and therefore a good tax consultant is also needed. Do a gap analysis for mandatory and non-mandatory fields. Gap analysis could typically, I'll talk you through the timelines, typical timelines also in the next slide. So gap analysis could take anywhere between 4 to 6 weeks or 8 weeks if the group's number of entities is large. Identify the right integration method, so that's critical also. Identify the right file format, how you will connect, whether APIs or whatever format, if it is Excel or whatever. So that needs to be identified and sorted out, agreed, or to be identified and finalized now. The APAR workflow, why it is featuring here is also very important, because when you're actually approving the invoice, when 1 level or 2 level, and then there is negotiations happening, okay? If you approve it and call it the final approval, the invoice will already go to FTA, and therefore relook at your APAR workflows, okay? That's very critical. If you want to put in 1 or 2 more layers before the final approval of the invoice happens, better do that as part of this project. Otherwise, you will end up getting more rejections and therefore doing more reconciliations later on. Perform a proper user acceptance test, one with the ASP service provider, and when the government opens up the UAT environment, do a proper user acceptance test of all your invoice categories. Don't compromise on that. And then get ready for the pilot phase. Typical gap assessment is about 7 to 8 weeks. It can be much earlier, much shorter also. So, but give yourself a time of 7 to 8 weeks for the gap assessment. And then the implementation, actual rollout in phased manner can take anywhere between 12 weeks, 12 to 14 weeks. It can be much lesser also. We are talking about at least 3 to 4 months or 5 months from now to be ready. Okay. A good thing is that government has not released the test environment even in UAE. That calls for a big investment and big planning for the government to be able to come out with the infrastructure that can hold all the invoices and send out confirmations as and when the invoices are received, right? There's going to be a lot of parallel invoices at any given point of time. They could be receiving thousands of invoices from all the vendors, all the entities, right? So therefore, that planning is taking time at the government level. So when that is ready, we should be able to start doing the testing. Critical success factors, I'm going to leave it with Girish.
So I think the difference in when we talk of this particular implementation is the element of, the technical part which comes in, right? I think functional, we all have consultants who can do the functional element, but important element is, since we are talking of primarily, the PayPal network, I think our advice would be that you also get the technical element of it also coming into the picture at the start when you're doing the gap assessment, right? Because yes, we know the mapping part of it, right? But also important to understand, what are your capabilities as far as the ERP is concerned, right? And what you need to do additionally in terms of primarily getting ready. So that's the key differentiator here, like we did, I think with the VAT also, is that we spoke about both the functional and the technical element of it. You would require, primarily both the functional and the technical. I think as Jay pointed out, maybe it's a time to revisit your VAT treatments if they are not in order, because a lot of these have been set up in the initial phase where you basically, in the system you're configured. And some of them, actually speaking, has been left to the user level. It has not been hard-coded. So sometimes the user decides that, yes, fine, this is standard rated, this is zero rated. We have kept that flexibility in the ERP systems. And maybe as finance, we are, experiencing and we love correcting what the users are doing, right? That is not the ideal solution, right? It is effectively to look at those treatments also so that, you are able to kind of, take the second chance and get it right, because now you don't really have a review that you had normally as a finance function, right? You press, it is going to the tax authority. And then whatever you need to do, you have to do through the other route. And, God forbid, you are issuing a lot of credit notes, in your system, right? So that's something which ideally you should avoid. Okay, so I think these are all there, right? And obviously, since this is something new, look at providers or technical providers who have the capability in other parts of, who have done it in the other countries as such, right? That's something which we would advise you as such, okay? I think with that, we are done. And now we'll have a joint session with Jay, where we'll address all your questions.
Yeah, thank you, everyone. It's been a pleasure to listen to all of you, right from Mr. Jalender's thing and what you people presented. I have a couple of questions which coming up from the presentation. One is, first of all, it seems that everywhere we've been talking about UAE legal framework and UAE standards or dictionary, etc. So where is Oman in terms of the framework, in terms of the status, and while we talk about 1st January 2026 for pilot project, are the companies which are going to be part of the pilot project already decided, been informed, or how that's going to be? That's one. The second one, I'm assuming, obviously, the consultants have been very busy in this, getting this e-invoicing thing done, because that's why there's a 5-corner panel, requirement, where the 2 ASPs, I really don't know what is the role, and more importantly, what's the responsibility of those ASPs? Okay, I think that's my question.
I'll take up the first one. The reason we took UAE as a background is both Oman and UAE are following a PayPal network. So it's an international organization. Their standards are across the countries same. Few minor changes, as I mentioned, decimals from 3 to 2. So Oman also, we are expecting they'll publish the official data dictionary within a couple of months. But almost it will be same like UAE, because UAE also has followed from PayPal, which is called PINT International Directory. So it's safe to take the base of UAE for Oman. Second question.
So I think when you talk about the ASP part of it, I think, so, UAE is little ahead in terms of that element of it, where they are now accrediting the ASPs. And as on date, there are about 60 plus ASPs who are applied, right? The list is not yet out, but the list is expected, it was expected in July end. Now we are August end. Hopefully by in September end, we'll get the first list of ASPs, okay, in UAE. right? As far as Oman is concerned, obviously, we are talking of the journey of first the data dictionary coming out, as far as Oman is concerned. Like Jay mentioned, it is expected to be on similar lines, maybe with, certain nuances, effectively as far as Oman is concerned, right? But the first step for Oman would be the data dictionary. Once that comes out, then obviously the second element, that's what happened in UAE. The data dictionaries have come out, and that's how then the ASPs are now in the process of being selected, right? Although the regulations even in UAE are yet to be released, okay, the regulations is primarily from a perspective of saying, they have set the broad framework, B2G, B2G, B2B, B2G, right? It is only that, what are the phases and who will be in the first phase, what is the level of entities which have come out. In Oman, there is some amount of clarity, like Jay had put it in slides, right? So hopefully that answers.
Yeah,
I think
and
there
just
was
to
a question on the ASP, yeah?
Yeah, you want to
Yes.
Yeah, please.
So what's the role of the ASP? That was the question, right? So if there is no ASP, okay, FTA cannot pull information from all your ERP systems in the way they want it. And they need to actually build infrastructure to tell you what an invoice is accepted, what is rejected, and all that. Think of it as an exchange, right? So the role of the ASP, basically they provide the application that connects with your ERPs, pulls the information, and then validates whether the XML format and the formatting of these data is corrected, and then they push that into the FTA system, and then they receive the FTA confirmation, and then they pass it back to the seller and to the buyer's ASP.
So in fact, they're just operating as a post office. They don't have any responsibility per se as an ASP. It could be fine for the initial stage of it, where the implementation that we make sure that they're following the right pattern, etc. But to have them on a perpetuity basis, okay, it doesn't make sense. And who's going to be bearing the cost of those ASPs?
Yes, this is a cost.
Unfortunately, I'm a minority here amongst these people. Everyone here is probably in practice or in consultant. I'm on the other side of the table, so I'm more interested in knowing that.
Look, that's a question many of our clients are also asking. So what is the cost, and where does who bears the cost? See, this is something, in my view, this is my personal opinion, that government has to do this because they don't want to put that cost. They've actually put it on ASP, and you need a standard systems, right, in this region, especially they have a detailed eye for standardization, and therefore they went for the PayPal certification. That involves cost also. The ASP maintains that application. They maintain the software, the connecting parameters, and the configuration for your source system, and the mapping to the XML to the mandatory fields and all that. They maintain that application. It's cloud-based, and then that needs to be 24/7, and it has to be available, and it has to pull out the invoices in real time, push it into the FTA systems and all of that stuff. And they also provide you dashboards, real-time dashboards of what invoice is received, what is rejected, and all of that, right?
Making it very enticing, but it's not very good.
So that's why we are saying that use this as an opportunity to look at your processes and optimize your processes also. That same question we've answered at least to multiple clients. They are asking us, okay, what's the cost-benefit analysis of this investment that we'll do to the ASP? In my view, having done digital transformation for 25 plus years, this is a great opportunity. I've been selling digital operation and APAR process automation for several years. Many of these automation processes, digitalization process actually don't go high in the prioritization, and therefore the VAT and other things take priority. This is a great opportunity actually. The cost-benefit analysis can be a lot more, and the cost that you'll spend with the ASP is quite manageable and recoverable. That's basically what we think it should be.
Yeah, and just to add the point, ASPs are not only just working like a postman, they do a heavy lifting. There are a lot of responsibilities which tax authority impose on them. For example, in UAE, there's a insurance of 12.5 million, which ASP has to give to ensure cyber security, data protection law, professional indemnity. So they have a lot of responsibilities which they perform, and developing this system of validating invoices into fractions of second, it's not easy. So if you'll try to develop that portal of your own without hiring an ASP, it will cost you millions. So that's the role which ASP performs by giving you license at a very low cost. Yeah.
And what about KSA? They didn't went with 5-corner model.
Yeah, KSA went for clearance model, wherein supplier was directly reporting to the Fatura ZK portal. They were validating, and then it can be sent to.
That was taken over by the government.
Yeah, that was taken.
So they have taken the load.
tax authority have taken the
Yeah.
ASP rule, right?
Yes.
No, it's not an ASP rule, right? So effectively, they went through a long phase, right? The first phase was where you were generating these documents. Okay, the owners again, sorry, I thought you can hear it or, okay, maybe the recording will not happen. Yeah, so they went through two phases. Yeah, one is where you were talking directly to the customers. Okay, you were expected to do the format. This is like they say before the thing, you're doing the marathon run, right? The initial rounds as such, right? Subsequently, if what happened was in the system, then the Zakat system, you are sending the data. If it is not in the format, it gets rejected. Only when it is in the format, it is accepted. And then they give the, kind of confirmation, and that is what you send to the, to your customer. Yeah. Yes, they did a little bit of heavy lifting. Now, also when you take ASPs, they are also the repository of your, the e-invoicing. You can choose to do that. Either, they will do it in their cloud platform. You can choose to keep it in your servers. And in fact, there is one more thing which is there. You can also become an ASP. As an entity, if you really have that kind of volume, and you're prepared to take all the IT-related elements of keeping data security, data availability, all that, if you're willing to do it, that is also possible that an entity can become an ASP. Yeah, with, of course, a technical collaboration.
Hi. I noticed Arabic was a part of the KSA requirements. How much of Arabic is, there's no Arabic requirement in Oman?
Both.
So it's not, maybe you take the whole
Yeah.
bit of it.
Arabic is not mandatory in UAE and Oman.
In Oman as well?
Yes.
Because in Oman, in the VAT invoice, it says it can be in Arabic, right?
If audit if they ask you at the time of audit, those samples can be given as Arabic. But by default, it can be English. And the reason is why they are going with the PayPal model is the ultimate aim is to share invoices across countries. Oman can share with UAE, with Malaysia, with Australia, wherever the network is there. So if they will keep the Arabic as a mandatory, it will again stop the flexibility to share with the other countries. So that's why, being mindful, they have not kept it.
Thank you.
Yeah.
So every invoice needs to be in this format. There's XML. Like for example, in bank, they charge 100 paisa if you go on withdrawal from ATM of other bank. Okay. So even the 100 paisa invoice has to be in this.
Yeah, banks have facility of monthly summary invoices. One of the use cases which was displayed by Mr. Ram and Girish. So that can be a monthly summary invoice for all the transaction in month, but that has to be again e-invoice through the network.
Summary by customer or the
Yes.
total?
By customer, let's say in month he has done 30 transactions, so one invoice. Even similarly, now banks are sending monthly invoice. They don't send invoice per transaction for 100 Vesa. So it's the same summary invoice, which is digital now, it will be e-invoice later.
I think in the mic, because we want to record your question also.
Simplified tax invoices also will be part of this process?
Yes.
All?
If it is, unless it's a B2C element of it.
In Oman, they are covering B2C. UAE, they are not focusing in B2C in phase 1.
I have a question. With the cost involved, do you think that making it mandatory will just apply in Oman? Especially we are in the Oman market and even the VAT invoices, still we are having many people not issuing VAT invoices. Now we are talking about e-invoicing mandatory from 2027 for everybody. And with the cost of ASP both for supplier and the customer, do you think it will apply?
I think since it's being recorded, we are not the right person to answer that.
I think you answered your question yourself, right? Where you said that people are not releasing the VAT invoices. Yeah.
this ASP software that you were talking about. Now in Singapore and Malaysia we already implemented it. Is it the same software which is going to be used over here in UAE as well, or something else is being developed for those countries?
Like UAE and Oman, they are developing their own corner file similar to PayPal. ASPs you can select of that country or new ones.
So any software which is already existing, so it's not going to be costing very high because nothing's new to be developed.
ERP can remain as it is. Only thing it should have capability to share the data with the ASPs.
No, I'm talking about ASP, the software that ASP will be using it because it's the only software. Nobody is going to sit there and watch all the invoices received by them.
Correct, if I understand your question correctly.
Or is there
So basically,
technology will be there?
yes, okay. So let me break down your question. So the ASPs and the software already exist in other countries. They're just trying to bring it here and customize it for this country, okay? And they need to install or create an instance that is going to stay here, and therefore they need to replicate all of that hosting cost and all of that, okay? Assume no changes are needed, yes, then they will still have the hosting cost and all that. Number two, then they need to connect to the local ERPs and all of that. So the connectors also exist, okay, because Oracle or SAP or JD Edwards or PeopleSoft are all the same. But then we need to configure that for the existing here clients and all of that stuff. So they basically, you can say there's an incremental cost involved from the ASPs to operate it. So that's why they are seeing this as a great opportunity also. And therefore you can expect the cost also to be incremental. So it's not going to cost a lot of money. It's not like a new ERP implementation. This is going to be incremental only. Yeah.
So in your experience, is it kind of a monthly fixed charge that ASP will be charging, or is it per invoice basis in Malaysia and this place?
Break up the charges into the three elements.
So basically you'll have a gap assessment one-time cost, then an implementation one-time cost, and then the annual charges can be a fixed price or a transaction price, depends on the size. So if you are very large, then these ASP service providers give you an annual subscription, bulk amount. That's it, you don't need to pay anything more. If it is small enterprises, then the business case doesn't work for them, so they go for a transaction price. Yeah? And if it is too small, then they charge a minimum amount, fixed amount for each of these. Yeah?
Thank you.
Yes. Just I want to ask, once we fully implemented the e-invoicing, the input VAT will be automatic sales, right? So when they will start checking this, the input VAT fully?
No, we want to give equal opportunities. Yeah. So I think basically checking is the prerogative of the government. When, where, how is their prerogative, right? What we can only do is we can ensure that when we are implementing these systems, we do it the right way. Yeah?
But the UAE mandate did mention that the ultimate objective of this is to look at UIT VAT automation, but they have not mentioned a timeline on that.
Of course, I believe that once fully implemented, definitely they will make compulsory.
Till the time some of your inputs will come through PayPal network, some would be still manual. So till 28, it will continue hybrid. After 28, you can claim input tax only as per the tax portal.
I think we can get Rajendra ji to tell which country has done this in full implementation, where there is an automatic VAT return generation.
So another question.
No one. So it's always work in progress.
Okay, those who have the ERP system, they will customize it based on the requirement, right? But those who don't have ERP systems, so can they directly input the invoice in that ASP?
So the ASPs have also the module where you could generate the invoices from the system. Okay. So it could be a very simple, an Excel-based kind of an upload.
Sir, first is whether Oman has a data protection policy. If it has, what is the guarantee for this particular e-invoice? Because I just heard you that you're going to do B2C. So, since you are on record, is something very, very pricey, you know. And how the data will be protected, you never know. It's an electronic world. So whoever is an influencer here must also talk to the government on a very strict data, stringent data.
Next year. Next year. It's not yet year. It's
Next year. I don't know that.
Yeah.
Europe is having these problems.
Yeah.
Countries, they don't want it. They say, no, our data protection policy is there, so we will not be able to do it. But somehow they want to do it, slowly they are trying to do something.
Correct.
Thank you.
That's why it's critical even when evaluating ESP. These are the points contractual which has to be discussed and contracted with them, that who will be responsible if there is any leakage of private data. So who will be penalized under PDPL law, which is going to come in Oman.
It's
so these
not
are
yet there, right?
not yet.
Law is not
Next year will be there. So different ASP will have their different contractual terms. So even that negotiation and agreement takes time.
And it becomes that much more expensive, right?
Who is that?
Small players cannot afford.
Like as Unmeshji mentioned, there was some quote, tax and death are inevitable. So even though it's costly, we have to do.
No, one thing I was saying, all this, with Power BI we cannot do this.
I think when you talk about Power BI, it is primarily a reporting tool. Okay.
Yeah.
Now, what is expected here is certain protocols to be followed. Okay. And that is where, effectively, see, very simply, is Power BI today a PayPal member? No. Right? So it is a reporting tool, right? Now, when we talk about, basically the PayPal network, right, it has got certain standards, and Power BI is not, is not used to transmit data. Power BI doesn't transmit data to the, different authorities or something, right? That is not the rule of Power BI. Power BI, it could be that, yes, when tomorrow you are having the ASP, right? And if you want to do analysis, you could take the Power BI. But that same dashboards are being offered by the ASP as value additions. Yeah. So Power BI has got its purpose and use, but not here.
To express gratitude to our speakers, I request our chairman, CA Unmesh, vice chairperson, CA Sangeetaji to be on the stage. During the speech of Rajendra Prasad, he was mentioning about in India, they were bringing the faculties from other state. In Oman chapter, we can also proud. And our chairperson, CA Unmesh, is putting best effort to connecting all the speakers and bringing, we can see that all the events we are bringing faculties from out of Oman. Today we are having two of the esteemed faculties from Dubai to our event. Thank you, CA Girish and CA Ram, for bringing your practical experience and wealth of knowledge from UAE to Oman. I miss our Central Council member, CA Rajendra Prasad also.
Rajendra sir will be addressing the queries on the SSP and AYM portal if anybody has a question. So please wait. We'll just finish the felicitation and we can switch to
Yes.
Come.
Requesting CA Ramananda Prabhu to facilitate CA Jay. Requesting CA Jim, our past chairperson, to felicitate CA Dram. Requesting CA Badriji to facilitate CA Girish.
So good evening, dear members, esteemed chief speakers. On behalf of ICAI Oman Chapter, it is my privilege to deliver the vote of thanks for the conclusion of this insightful session, E-Invoicing in Oman and UAE, a game-changing reform. First and foremost, our heartfelt gratitude goes out to our distinguished keynote speaker, CA Rajendra Kumar, Central Council member and Chairman of GST and Indirect Taxes Committee of ICAI. Your keynote address has given us a valuable perspective, especially the way you have told about the evolution of tax. And it is interesting to know that it has started from a person from Chennai. And also you have taken in brief the way how it works of GST in India. And also it's a proud moment to know that ICAI is a main or sole trainer for anything which is happening related to GST all across India. And so many of MOUs have been signed across 22 states in India and all of the northern region. So it is a proud moment to know all of these. Insightful session from you, sir. And a special thanks goes out to our past president, CA Bhavani Prasadji, for coming all the way and attending our session today. Special thanks to our expert speakers, CA Jay Duseja, CA Girish, CA Subramaniam, for sharing their deep insight and practical knowledge. Their sessions help us to understand not only the implications, but also the challenges and opportunities related to e-invoicing. And the way they have put it forth in such a simple way, starting from the difference of e-invoicing and direct or digital invoice, and also the different methods involved in that by the 5 corners or people method, and the different aspects or the fields, the mandatory fields which are required on each invoices, and also the technology aspect of it. The challenges faced by it is all covered in a very simple and very elegant manner. And I'm sure all of the participants who are present here have gained insightful learning from these sessions. And I would also like to extend our gratitude and appreciation to our ever-supporting sponsor, College of Banking and Financial Studies, and also for providing us with such an excellent facility for hosting today's event. To our members and participants, thank you for your presence, your active, engaging, and thought-provoking questions, and for making this session even more enriching. And here I just remember the words of John Kennedy: change is a law of life, and those who look only to the past or present are certain to miss the future. So finally, a word of gratitude to all the members who have worked tirelessly behind the scene to make this event successful and seamlessly conducted and executed. Once again, thank you everyone for being here.
Thank you, Sangeeta ji.